Welcome to the Deep Dive. We're here to unpack complex ideas, distill them into insights you can actually use. Now, many people believe that to succeed in really volatile environments, especially fields like finance, trading, you need the perfect strategy, or maybe insider info, or I don't know, a crystal ball even. But what if the real secret wasn't out there in the market noise, but actually right here, inside your own head?
Yeah, it's really fascinating, isn't it? How often we instinctively look outwards for the answers, for the solutions, when really the biggest hurdles and maybe the biggest levers for success, they're internal. So today we're going to dive deep into a truly foundational work, one that kind of flips that whole script.
That's right. Our journey today takes us into Trading in the Zone by the late Mark Douglas. And look, this isn't your typical investment guide. It's not packed with charts or fancy indicators. Douglas, writing really clearly in the trading psychology genre, he offers this singular, almost revolutionary focus. It's all about developing the right mindset, the mindset you need to trade consistently and hopefully profitably. So our mission for you today is to pull out the most important nuggets from this really groundbreaking work. We want to show you why understanding, and maybe more importantly, controlling your internal state is so crucial. And not just for navigating financial markets, but honestly for mastering pretty much any high-pressure situation life throws at you.
Exactly. It's about recognizing that, while the world around us often feels chaotic, unpredictable, our internal world, our thoughts, our emotions, our beliefs, that's actually something we can influence. It's within our domain. And Douglas, well, he basically gives us a roadmap to achieving that internal mastery.
Okay, so let's start by tackling the really radical premise Douglas puts out there, like right at the beginning of Trading in the Zone. He states it so clearly with total conviction. It's never about the market. It's always about you. I mean, that just immediately challenges everything most people assume about trading, or really about succeeding in any unpredictable field. We're sort of conditioned, aren't we, to think success comes from being smarter analytically, predicting moves better, understanding complex
Or
algorithms.
having that secret piece of information, yeah.
Right. But Douglas argues that most traders fail, not because they don't know enough about the market, but because they don't know enough about themselves. Self-knowledge is the gap.
And this really brings up a profoundly important question for us, I think. Why is this idea so counterintuitive, especially in a field like finance that seems so analytical, so external? Our education system, our professional training, even just pop culture, it all pushes us to seek external answers. We're taught, observe the world, gather data, analyze it, predict what happens next. In finance, yeah, that means spending countless hours studying economic reports, company financials, intricate chart patterns, geopolitical stuff. We try to master the market, but Douglas just cuts through that. He says all that external knowledge, no matter how vast, it's pretty much useless without internal control. He's basically saying that your perception of the market and how you react to it, well, that is your market experience. The market itself, it's just neutral. It's a stream of information, possibilities flowing constantly. What you do with that info, how you filter it, how you react emotionally, that all happens inside your own mind. It's a huge shift, isn't it? From trying to tame the external chaos to mastering your internal response to that chaos.
So he's really throwing down the gauntlet against that conventional wisdom, the idea that success comes from just being a better analyst or predictor. Instead, he's saying the real fight, the true battleground, isn't about figuring out the market's next tick. It's about mastering your own psychology. And just think about the common behaviors you see, right? Among traders who are struggling, or frankly, people struggling in any competitive space, they're endlessly searching for that next holy grail strategy. They buy expensive courses, follow gurus religiously.
Always looking for that external fix.
Exactly. Convinced that the next piece of outside info, the next secret technique, that's going to be the golden ticket. But what they're often not dealing with, and what Douglas really forces us to confront, is their own stuff, their own fear of losing, their impulsivity when things get exciting, or, that stubborn way they cling to a losing position, driven by hope, not logic.
Blind hope, yeah. It's like they're their own worst enemy, but they're looking everywhere else for the villain.
It's so true.
And this really does apply way beyond the trading screen. I mean, think about it. In your career, maybe in relationships, or chasing any big personal goal, your internal mindset, that often dictates your results way more than the external circumstances do. Like, imagine an aspiring entrepreneur. Let's call her Alex. Brilliant idea, solid market research, everything external looks good. But maybe a deep-seated fear of failure, or just not quite believing in herself enough that might stop her from taking those necessary risks.
Like making that crucial sales call.
Oh, exactly. Or launching the product. Her internal state, her mental landscape, that becomes the real barrier, much more than any market condition. Or flip it around. Someone who keeps making rash decisions because they just want quick results. Maybe they gamble away good opportunities because they can't manage their impulses. Douglas's core idea is universal here. If you can't manage your internal environment, your thoughts, feelings, beliefs, you're going to struggle to navigate any complex, unpredictable external world, whether that's the stock market or just, life.
Okay, so if it's all about the internal game, what does this radical shift mean for achieving something like consistency? That seems to be the goal for so many. Douglas explains that winning consistently, it has absolutely nothing to do with predicting the market accurately. Instead, you need to fundamentally change your approach. Treat trading like a probability game, like how a professional poker player views cards or a seasoned blackjack player approaches the table.
Yeah, it's a complete departure from that intuitive predict and profit idea that so many people fall into, not just in trading, but in lots of high-performance areas.
It really is.
And this is where Douglas really gets into our wiring, Our innate human desire for certainty. We crave guarantees. We want to know what's going to happen next, especially when there's money or significant effort on the line. But in the market, Douglas just keeps hammering this home. Anything can happen, period. So your job then isn't to predict. It's to accept this fundamental uncertainty, to really embrace the randomness of individual outcomes, and to, as he puts it, think in probabilities.
Think in probabilities. What does that actually look like in practice?
It means understanding that over a series of events, a lot of trades, a lot of decisions, your statistical edge, if you have one, will play out. But crucially, it won't necessarily play out on any single trade. And definitely not just because you want it to right now. This probabilistic mindset is so key because it means you stop trying to force a specific outcome on every single event. Every trade, every business move, every attempt at learning something new, you're just playing the odds, consistently, methodically. Knowing that over a large enough sample size, your advantage should, materialize. And that takes immense psychological pressure off each individual outcome. You're not living or dying by the result of this one thing.
Right. So thinking in probabilities, as Douglas lays it out, it really means accepting that individual outcomes are basically random and unpredictable. Like a single trade could go against you, even if your setup looked perfect on paper, just to get,
Yeah,
anything can happen.
exactly. Anything can happen.
And this implies that losses aren't just possible. They're an inherent part of it, like statistically necessary.
Absolutely necessary. They're the cost of doing business in an uncertain environment.
Okay. And that demands this profound emotional detachment from the result of any single trade. It's not about being right every time.
Right.
That's impossible.
Right.
And trying just sets you up for failure.
It's a self-sabotaging goal, yeah.
It's about being profitable over a series of trades.
Yeah.
And realizing that the occasional loss is just noise, a statistical inevitability.
Precisely. It's just part of the game's math.
Let's dig into that poker or blackjack analogy a bit more.
Okay, yeah. Think about a pro gambler, someone who genuinely makes a living doing this. They know they won't win every hand. In poker, you could have pocket ace's best starting hand and still lose to some lucky river card that gives your opponent a straight or whatever.
Happens all the time.
Right. In blackjack, the dealer can always hit 21. It's just probability. But by playing with a consistent statistical edge, maybe they're counting cards or just following perfect basic strategy, managing their money carefully, never chasing losses. Over hundreds or thousands of hands, they become profitable. They don't get mad at the cards or the dealer when they lose a hand. They don't blame fate.
They don't take it personally.
Exactly. They just acknowledge it, maybe take a breath, reset, and move on to the next hand. They trust their edge will play out in the long run. This mindset completely removes that crushing psychological need to be right every single time, which is where so many amateurs, traders, or otherwise fall down. They try to force things, they bet too big, or they ditch a perfectly good strategy after just a few unlucky results.
Because they personalize the outcome instead of seeing it as just one data point in a statistical series.
You got it. They make it about them, not the probabilities.
Okay, so this probabilistic thinking is foundational. Now let's unpack this even more. Douglas actually boils down the core mental framework needed for this consistency into 5 specific truths. And he stresses these aren't just like interesting ideas, they are foundational beliefs. Beliefs that, if you truly internalize them, can completely reshape how you see the market and free you from those emotional traps.
Yeah, and what's really brilliant here is how these 5 truths, when you look at them together, they systematically dismantle the most common psychological biases that just plague traders. They're explicitly designed, as he says, to remove fear, doubt, and hesitation and create mental freedom. They're like the antidote to that emotional roller coaster. So let's break down each one. Let's really get into what they mean and why they're so powerful. Okay, the first truth. Anything can happen. And this isn't meant to be scary, it's actually incredibly liberating. It means every single moment in the market is unique, totally unpredictable. No two situations are ever exactly the same. There's zero certainty about how any given trade will play out.
Imagine the mental energy you save when you stop trying to control something that's fundamentally uncontrollable.
Exactly. This truth directly combats that illusion of control, which is such a common trap, right? Especially for newer traders who think they can somehow force the market to do what they want. It also eliminates overconfidence. It forces you to always use robust risk management because you know that any trade, no matter how perfect it looks, could turn against you. It's about acknowledging the market's chaotic, non-linear nature and building your approach to withstand its surprises rather than trying to predict them.
It's like you can't predict an earthquake, but you can build your house to code so it can withstand one.
That's a great analogy. You structure your trades to survive the unexpected.
Okay, so that shifts the focus from prediction to resilience.
Yeah.
Makes sense. What's the second truth?
Second truth. You don't need to know what will happen next to make money. Now, this one often hits people hard because it contradicts the very reason many people get into trading in the first place. They think they need to beat the market with superior predictions.
Right, to outsmart everyone else.
Yeah. But Douglas says, nope, your profitability doesn't come from predicting the next tick or the next day's close accurately. It comes from executing your edge, whatever that is, over a series of trades. And this truth is profoundly liberating too. It frees you from that crippling need to be right all the time or to forecast the future perfectly. We assume trading success means accurate prediction, but Douglas flips that completely. Your focus shifts. It goes from trying to guess the future, which is impossible, to consistently executing a well-defined process that has a known statistical advantage. Think about the mental strain that removes. It allows for much more objective, disciplined decisions because you're not carrying the weight of trying to be Nostradamus.
That is a huge weight off your shoulders, isn't it? To realize you don't need to be a psychic to succeed. Okay, what comes next? Truth number 3.
Third truth. There is a random distribution between wins and losses for any given set of variables that define an edge. Okay, what does that mean? It means a string of losses doesn't automatically mean your system is broken or that you're a terrible trader. It's just probability playing out. And conversely, a string of wins doesn't mean you're suddenly infallible or that your edge is now guaranteed for the next trade.
So streaks happen both good and bad just by chance.
Exactly. Random distribution. And internalizing this is vital for managing those emotional swings. If you truly get this, you understand that a losing trade is just one event in a long statistical series. It's not a personal judgment on your competence or intelligence. This helps traders accept losses as just, well, part of the probability game. It helps prevent that destructive revenge trading.
That urge to jump right back in and make back the loss immediately, usually by breaking all your rules.
Precisely. And it also prevents the dangerous overconfidence, the euphoria that can happen after a winning streak, which often leads to taking stupidly large risks. It reinforces thinking statistically, not emotionally. Like you wouldn't throw a die expecting it to land on 6 every single time, right?
Right.
You understand the randomness.
Right, you focus on the overall pattern across many throws, not obsessing over each individual result. Okay, got it. What's the fourth truth?
Fourth truth. An edge is just an edge, not a guarantee. So your trading system, your strategy, no matter how good it seems, how much you backtested it, it provides a statistical advantage. That advantage plays out over a large sample size, yes, but it offers zero certainty of profit on any individual trade. None.
So it tips the odds slightly in your favor over the long run. But that's it.
That's it. And this truth is crucial for managing expectations, which in turn is crucial for emotional stability. It stops you from behaving recklessly after a win, thinking, wow, this system is foolproof, I'm going to bet the farm next time.
Yeah.
And it stops you from despairing after a loss, thinking, oh no, the system is broken, I need to find a new one immediately. It emphasizes the long-term probabilistic nature of your edge. It reminds you that you just have to keep showing up, keep executing your plan carefully, and trust that the numbers will work out over time, not necessarily on this trade or even the next 5 trades. Even the best systems have losing streaks. That's just the nature of uncertainty.
So the system gives you an advantage, a probability bump, but definitely not a crystal ball for this specific trade.
Oh.
Okay. And the final truth, number 5.
And finally, the fifth truth. Every moment in the market is unique. This is such a powerful reminder. It tells you, avoid imposing your past experiences, your biases, your expectations onto what's happening right now in the market. This directly combats common cognitive biases like recency biases.
Where you give too much weight to what just happened, assuming it will keep happening.
Exactly. Or confirmation bias, where you only look for information that confirms what you already believe, and you ignore anything that contradicts it. This truth encourages you to adapt to new information as it comes in, to react to what the market is actually doing now, not trying to force fit it into some old pattern from last week or last year or some preconceived idea you had.
So it promotes being present, aware, flexible.
Absolutely. Present moment awareness, which is essential for making objective, adaptive decisions in such a dynamic environment. Your brain loves patterns, it tries to project them forward, but Douglas warns us, each moment is truly distinct.
Wow. Okay, those 5 truths.
Yeah.
If you could genuinely internalize them, I mean, really believe them,
Yeah.
that offers an incredibly powerful framework. And not just for trading, right? Like, think about someone contemplating a big career change. That first truth, anything can happen, well, that prepares them for unexpected stuff, good or bad. It fosters adaptability.
Yeah, you're not thrown off balance so easily.
And the second, you don't need to know what will happen next. That frees them from needing the perfect, guaranteed plan before taking the first step. It lets them act, trusting their skills and process, instead of being paralyzed by the unknown.
Huge.
The third, random distribution, means a setback isn't a personal failure, it's just part of the journey. Fourth, an edge is just an edge. Helps manage expectations. Your efforts give you an advantage, sure, but not a guarantee of instant success. And fifth, every moment is unique, encourages you to deal with the current reality of your job search or your new role, not just rely on old assumptions.
It really is a recipe for navigating uncertainty in general.
The liberation you get from accepting that certainty is an illusion, and that consistency comes from your process, not from prediction. That feels incredibly freeing, whether you're trading stocks, building a business, or even just trying to stick to a diet.
Precisely. It's all about building a robust internal operating system, one that can thrive even when you have very little control over the external environment.
Okay, so this brings us to a really crucial point in Douglas's work. He explicitly identifies the enemies within. He says most traders aren't really battling the market. They're battling their own internal demons. And he directly calls out fear, greed, and hope as the real enemies of consistent success. That's a pretty stark realization, isn't it? That the biggest threat to your bottom line or your progress in any high-stakes game isn't outside volatility, but your own internal emotional chaos.
It is, and it raises that important question, why these specific emotions? Why are fear, greed, and hope so uniquely destructive in a trading context? Let's unpack them. Fear, right? Fear leads to hesitation. It makes traders miss perfectly good opportunities because they're just afraid of losing money again.
They see a valid setup, but they freeze, maybe remembering a past loss, and just watch the market move without them.
Exactly. Or fear makes them cut winning trades way too short. They grab tiny profits because they're anxious, only to watch the market keep running strongly in their favor, leaving huge potential gains on the table.
Okay, so fear causes inaction or premature action. What about greed?
Greed pushes you to over-risk, taking positions that are way too big for your account size, chasing every last penny. It can lead to using excessive leverage, which magnifies losses just as much as gains. Or it makes you stubbornly hold on to losing trades, hoping against hope for a turnaround, just because you can't stand to take the loss or you want to maximize every possibility.
And hope. Hope sounds positive, but Douglas sees it as dangerous.
In this context, yes, hope is insidious. It's often a passive, wishful thinking kind of motion. It leads traders to ignore their preset stop losses.
Like, oh, it'll come back. I just hope it turns around.
Exactly. Wishing for a miracle that almost never comes. And that turns small, manageable losses, the kind your plan accounted for, into catastrophic ones, all because you were hoping. So Douglas's antidote to all this self-sabotage, it's powerful and concise. Detach from outcomes and trust your process.
Detach from outcomes, trust your process.
Yeah. It means your emotional state should not be tied to whether this one trade wins or loses. Your job, your only focus, should be on executing your predefined strategy flawlessly. Like a robot, almost.
So we're talking about really common self-sabotaging behaviors that stem from these emotions, aren't we?
Yeah.
Like changing your plan mid-trade because fear suddenly pops up, even though your initial analysis was sound,
Absolutely. Emotional hijacking.
or getting really attached to a specific outcome. Maybe you had a bad day yesterday, and now you feel you need to make that money back today, so you take a reckless, oversized trade out of desperation.
Revenge trading. Yeah. Very common.
Or maybe you move your stop-loss order further away.
Mm.
You tell yourself the market has to turn around here, just hoping it saves you from a loss you should have already accepted based on your own rules.
Yes. Douglas points out again and again how this emotional attachment just completely overrides rational thought. It leads to huge, totally avoidable losses, even when the trader intellectually knows better.
And just to be clear, when he says detach from outcomes, he doesn't mean become apathetic or stop caring about whether you win or lose
Yeah.
overall, right?
No, not at all. It's about focusing your energy entirely on executing your process perfectly, without letting your emotions interfere with that. It's about recognizing that each individual trade is just one small data point in a much larger statistical game. The real value, the consistency, comes from applying your edge over and over, not from the emotional highs and lows of each result.
Okay. And you can easily see how these same emotional patterns mess things up in other parts of life too.
Oh, absolutely. Think about a project manager. Fear of missing a deadline might make them cut corners, rush things, and compromise quality.
Right. Or greed for a bigger bonus might push them to overpromise and underdeliver, damaging trust.
Exactly. And that false hope. Maybe hoping a problematic team member will just magically improve without any direct intervention. That can lead to prolonged issues, stress for everyone, instead of taking the necessary, maybe difficult, but realistic action.
So Douglas's insights into emotional discipline, they're really universal lessons in self-management for achieving external goals.
Definitely. It's about being proactive and disciplined with your emotions, not just reacting helplessly to whatever circumstances throw at you.
That makes perfect sense. So bringing this together, what does it all mean for building that elusive consistency, the holy grail of performance in trading or anything else? Douglas emphasizes pretty strongly that you will never be truly consistent unless you fundamentally trust your system, trust yourself to follow it, and genuinely accept uncertainty. And this leads him to his powerful concept of neutral thinking.
Yeah, neutral thinking. What's really fascinating here is this idea. It's where you consciously choose not to react emotionally to wins or losses. It's about maintaining this state of equanimity, calmness, treating both profits and losses as just simple data points. Nothing more, nothing less.
Like a scientist looking at experiment results, they don't get wildly happy if a hypothesis is confirmed or devastated if it's disproven. It's just information.
Exactly that. Both outcomes are just data feeding into the next step. Douglas actually uses the analogy of a trained pilot, professional, logical, calm, always in control. That level of mental discipline, he argues, is what truly separates the consistently successful from those who are perpetually struggling, always on that emotional roller coaster. A win doesn't make you feel invincible, right? So you don't suddenly start taking huge impulsive risks. And a loss doesn't send you into a tailspin of doubt, fear, or that destructive revenge trading we talked about.
You just observe it,
Yeah.
learn from it if there's something to learn, and then move on to the next opportunity, sticking to your rules.
Precisely. And think about the cognitive energy that frees up, energy that's normally just consumed by all that emotional turmoil.
Okay, so digging a bit deeper into neutral thinking.
Hmm.
It's not about not feeling emotions at all, because that's impossible. We're human.
Right, emotions will arise.
It's about not acting on them, especially when you're making critical, high-stakes decisions. It's about observing the feeling. Okay, I feel fear right now, but not letting that feeling dictate your action.
You've nailed it. Observe. Don't obey the emotion if it conflicts with your rational plan.
And you mentioned this connection between having a well-defined system and building self-trust. Can you expand on that?
Yeah, there's this really symbiotic relationship there. Your trading system, your rules, they provide the structure, the objective framework for making decisions. And then by adhering to those rules, trade after trade, win or lose consistently, that's how you build confidence in your ability to execute. You start to trust yourself because you keep proving to yourself through action that you can follow your plan even when it's hard or uncomfortable. And that process, that consistent execution over time, that's what actually hardwires the mental discipline you need. It becomes more automatic.
It's like building a muscle, the discipline muscle.
Exactly. And, we can speculate how building this kind of internal trust, this neutral thinking, applies elsewhere. Think about other high-pressure jobs. A surgeon in a complex operation. They absolutely cannot afford to be overwhelmed by fear if something goes wrong, nor can they get complacent if it's going smoothly.
They have to stay focused, logical, calm. Follow the procedure.
Right. Or an emergency responder arriving at a chaotic scene. They can't panic. They have to access their training, detach from the immediate emotional intensity, and execute their protocols precisely, even in elite sports. Often the difference between good and great isn't just physical talent, it's that mental fortitude. The ability to stay neutral, process-focused, under immense pressure.
Yeah, think about the calm, methodical way a trained pilot handles an emergency, running checklists, clear communication, precise actions.
Versus someone panicking at the controls, right?
Yeah.
Flailing, making irrational choices.
That contrast really drives it home. It's the difference between disciplined, consistent performance and just erratic, unpredictable results.
Fundamentally, yes. It's about having that internal control when the external world is chaotic.
Okay, that distinction is crystal clear. So after exploring all these powerful concepts, the radical idea that it's all about you, the probabilistic mindset, those 5 core truths, the emotional enemies, neutral thinking, why do most traders still stumble? Even after they learn strategies, study indicators, maybe even read this book, Douglas points out a few key reasons why people keep falling short.
Yeah, and if we connect it back, it really all circles back to his initial premise, doesn't it? Most traders fail, fundamentally, not because they lack market knowledge, but because they lack psychological mastery. They keep treating trading like a prediction game, trying to foresee the future, control the uncontrollable, instead of embracing it as a game of probabilities.
They stay attached to the outcome of each trade.
Exactly. They get emotionally tangled up in every win and every loss. They let those short-term results dictate their mindset, their confidence, their future actions, which leads to that vicious cycle of impulsive behavior. They haven't truly internalized a consistent set of beliefs, those 5 truths we spent time on. And crucially, they lack the mental discipline to actually adhere to them, especially when things get tough.
And maybe the biggest one.
Yeah.
They just can't truly accept losses as a normal, unavoidable, statistical part of the game.
That's huge. They personalize losses. They feel like failures when a trade doesn't work out, instead of seeing it as just a predefined cost of doing business or simply a random draw in the probability distribution. Douglas sums up this entire paradigm shift so perfectly with another great quote. You don't trade the market. You trade your beliefs about the market.
Wow. Say that again.
You don't trade the market. You trade your beliefs about the market. Meaning your mental framework, your internal convictions, those are the filters. They determine how you perceive the market, how you interact with it, and ultimately whether you succeed or fail. It's an internal game, first and foremost.
That really lands. Okay, so this isn't just deep theory that Douglas lays out. He actually provides very tangible, practical ways to cultivate this essential mindset. How do you put these ideas into action?
Right, and what's so insightful about these practical tips is, again, they're not about what specific stock to trade or indicator to use. They're all about how you approach the act of trading itself. They're designed specifically to reinforce that mental discipline, the probabilistic thinking, the emotional detachment we've been talking about. They bridge that gap between understanding the concepts intellectually and actually living them day to day. Okay, first tip he emphasizes. Trade with predefined risk. This means before you even think about clicking buy or sell, you know exactly how much you are willing to lose on that specific trade if it goes against you. And you place a stop-loss order accordingly. No exceptions, no hesitation.
So you decide your maximum pain point before you're in the heat of the battle.
Precisely. This directly implements probabilistic thinking. You're defining an acceptable loss up front. It takes the emotional decision-making about risk out of the equation in real time. When a trade starts moving against you, you don't panic or start hoping. Your plan already accounted for that possibility. The stop loss handles it mechanically. This prevents fear from making you exit too early, and it prevents greed or hope from making you hold on too long or risk too much. It's mechanical risk management.
That sounds like a powerful defense against those emotional hijackings. Knowing the worst-case scenario is already defined and accepted. Okay, what's next?
Second, Douglas hammers this home. Focus on the process, not the result. This is about fundamentally shifting how you measure your own success. Your goal isn't necessarily make X dollars on this trade. Your goal is execute my trading system flawlessly and adhere to all my rules.
Regardless of whether that specific trade wins or loses.
Exactly. This reinforces detachment from individual outcomes. Success is measured by your consistency in following your well-defined rules, not by the profit or loss of any single trade. In fact, Douglas would argue that if you followed your rules perfectly, even on a losing trade, that was actually a good trade in terms of process, because you did what you were supposed to do. This shifts your focus entirely to the long-term statistical advantage your process provides, freeing you from getting whipsawed emotionally by short-term P&L swings.
So it's about being a good player of your game, disciplined in your actions,
Yeah.
rather than just obsessing over the scoreboard for each individual play.
That's a perfect way to put it. Third tip, have a trading journal. And he means meticulously recording not just the basics, entry price, exit price, P&L, but crucially, your reasons for taking the trade, your emotional state at the time, and critically, whether you actually followed your rules or deviated.
So it's not just numbers, it's psychology too.
Absolutely. This journal becomes your essential tool for self-reflection and objective analysis. It lets you track not just financial results, but your emotional patterns, your adherence or lack thereof to your rules. It helps you identify recurring psychological traps or biases that you need to work on. It's like your personal laboratory for understanding and refining your own trading mind. You make the unconscious conscious.
It sounds like holding up a mirror to your trading mind, warts and all.
Uh.
Okay, and the fourth practical tip.
Fourth, set rules and follow them without emotion. This means having a clearly defined trading plan, rules for entry, rules for exit, both profit targets and stop losses, rules for position sizing before you even look at the market that day. And then your job is simply to execute that plan robotically, mechanically, almost like you're programming a machine, which is yourself in this case.
So the thinking happens beforehand when you're calm and rational.
Exactly. This creates a clear, structured framework that helps you bypass those impulsive, fear-driven or greed-driven decisions in the heat of the moment. It's about building a robust system that you can execute mechanically, which significantly reduces the need for constant emotional willpower when things get stressful. The rules become your externalized discipline.
The rules become your guardrails, basically,
Yeah.
keeping you on your planned path. Okay. And finally, Douglas also offers some powerful psychological techniques.
He does. Fifth, use affirmations and mental rehearsal. Affirmations are positive statements you repeat to yourself, things like, I am a disciplined trader who accepts risk unemotionally, or I consistently follow my trading plan. Mental rehearsal or visualization involves vividly imagining yourself calmly executing your plan. Seeing yourself identify a setup, enter the trade, manage it, and exit according to your rules, especially visualizing handling losses calmly and professionally.
So you're kind of pre-programming the desired behavior.
Exactly. These are proactive techniques to consciously reprogram your subconscious mind. Affirmations help internalize the 5 truths and the behaviors you want, overriding old limiting beliefs. Mental rehearsal builds confidence and reinforces those positive mental patterns. It makes the desired actions feel more familiar, more automatic when the real pressure situation arrives. You've already been there mentally.
You know, it's incredible how these practical tips, while clearly designed for the high-stakes world of trading, are just so universally applicable for developing discipline, mental toughness, a process focus in almost any goal you're trying to achieve.
Absolutely.
Think about fitness goals, right? Predefined risk could be setting realistic workout limits to avoid injury. Focusing on the process means celebrating showing up for every workout, sticking to the plan, rather than just obsessing over the number on the scale that day.
Yeah, perfect example.
A journal tracks your workouts, your food intake, maybe your mood, how well you stuck to the plan. Setting rules is having that diet plan or workout schedule and sticking to it even when pizza calls your name.
Resisting the temptation.
And affirmations and mental rehearsal, visualizing yourself reaching your goal, feeling strong, mentally preparing for those moments when motivation dips. It's a powerful toolkit for life, isn't it? Proving that so much of mastery really does begin internally.
It really does. The principles are remarkably consistent across domains.
Okay, so as we bring this deep dive into Mark Douglas's Trading in the Zone toward a close, it feels abundantly clear that his message isn't just revolutionary for traders, it's profoundly liberating for anyone dealing with uncertainty. He argues so forcefully that the real battlefield for consistent success isn't out there in the chaotic, unpredictable market. It's right here, in the intricate landscape of your own mind. It boils down to cultivating specific beliefs, really internalizing those 5 truths, learning to conquer your emotional demons, fear, greed, hope, and developing that unwavering mental discipline to truly trust your process.
Yeah, and if we just zoom out for a second, connect this to the bigger picture, Trading in the Zone is so much more than just a trading book. It's really a masterclass in self-awareness in mental resilience, the lessons apply far, far beyond financial charts. It's about deeply understanding that fundamental point Douglas makes. You can't control the market, but you can control your mind. And that fundamental shift in focus from trying to predict and control the external to mastering the internal, that's what makes this book so timeless and so universally valuable, not just for traders, but really for anyone striving for consistent performance in an uncertain world.
So here's a final provocative thought for you to consider as you go about your day. Maybe mull it over. If consistent success in something as inherently unpredictable and high stakes as financial trading ultimately comes down to mastering your internal world, embracing probabilistic thinking, achieving emotional detachment, cultivating those disciplined belief systems, how might applying these exact same principles transform your approach to uncertainty and success in your own life? What internal shifts, what mental habits or emotional reactions might be holding you back from truly thriving in your own chosen field, or from pursuing that challenging goal you've set for yourself?
It's a powerful question. We really encourage you to reflect on these ideas from Douglas. Think about how you might apply them to your own challenges, your own goals. Because the power to control your mind, to consciously shape your beliefs and manage your emotions, that's arguably the greatest edge you can possibly cultivate in trading and in pretty much everything else.